Welcome to Within the Frame, where we bring the most pressing issues across the globe into focus. I'm Kim Mok-yeon. Samsung Electronics has narrowly avoided what could have become its largest ever strike after management and its union reached a dramatic last-minute deal over wages and bonuses. The agreement includes stock-based compensation, a new semiconductor bonus system, and the removal of bonus caps, but it is already sparking broader debate over performance pay, shareholder rights, and the long-term impact on investment in Korea's semiconductor industry. Meanwhile, concerns over slowing growth and rising household debt are building ahead of next week's Bank of Korea rate decision as the government rolls out a new national growth fund for industries including AI and semiconductors. Tonight, we take a closer look at those issues. And for this, we connect to Song Soo-young, professor of business and economics at Chungang University. A big welcome, Professor.
Yeah, thank you for inviting me.
And also joining us is Kwak Jun-hee, Assistant Professor of Economics at Sagang University. Good to see you, Professor.
Yeah, thank you for having me.
So like we've said, let's first start with Professor Kwak. Samsung Electronics management and labor reached the tentative wages and bonuses deal just before the planned nationwide strike. I wonder, how would you assess the overall deal?
Yeah, overall, I think averting the strike is a critical relief for the Korean economy. But if we look closely at the terms, I believe the deal was settled on somewhat favorable terms for the labor union. And I think this is because management clearly felt the immense pressure of a potential production halt. So they made significant concessions. However, the core point, how to distribute bonuses across divisions, remains a deep structural dilemma. It is practically impossible to calculate the exact contribution of a single division. For years, the massive astronomical capital investments required to grow the semiconductor division were heavily financed by the steady cash flows generated from the mobile and home appliance divisions. And I think because of this cross-subsidization, enforcing a strict when you kill division by division bonus model ignores the internal financial ecosystem that have built the company, making feelings of unfairness inevitable.
Mm-hmm. So like Professor Kwak has mentioned, the agreement, it includes a new semiconductor bonus system and the removal of bonus caps as well. Now, while that could improve morale, some worry it may weaken Samsung investment capacity. Professor Song, how do you see this trade-off?
Yeah, as well explained, briefly explained by the Professor Kwak, and I believe that this becomes some calls for the attention of globally because seemingly the arch rival and who leads the exports and the GDP growth for South Korea, the two company has been looked at in comparison with how much they could earn for the labor workers in Samsung and the SK Hynix. Particularly, there are three features of the Samsung Electronics labor unions that deal with management of the Samsung is stock payment and then cash payment, and another finally is the overall performance incentive. So all these three features are considered, then the Samsung is turns out to be a little bit they win and they have get some better condition than the SK Hynix. The reason is because they could, as explained by Professor Kwak, Samsung could save the cash flow outflow from the company, particularly when even though the current super cycle of memory chip is very good, but it cannot last permanently at all. Therefore, when there is a downturn, actually the Samsung would be much safer, and they could they take the better position than SK Hynix.
Mm-hmm. So compensation and investment often move in opposite directions, and this is what we're seeing right now. So Samsung actually decided to pay some bonuses in company stock instead of cash, and some say this could better align employees with the company's long-term performance. Professor Kwok, what is the significance of this move?
Yeah, I think Professor Song have explained very well already, but in principle, giving stock instead of cash is a common way to get employees and owners on the same page. So when employees receive stock, they want the company's value to go up just as much as the management does. And they start thinking like owners in the long-term view. But beyond just giving stock, I think there is a very important rule in this deal. Employees can only sell 1/3 of their new shares right away. I think this specific limit has three major meanings. First, it keeps top-tier engineers from just taking their bonus and immediately leaving for a rival company. And if they want the rest of their money, they have to stay at Samsung. I thought that's the good thing. And second, I think it keeps them focused on the future. So they will work harder to increase the value of Samsung, for example. And ultimately, I think the semiconductor industry in a tough global race that costs billions of dollars. So by giving out stock with the selling limits instead of cash, I think Samsung can still reward its workers without emptying its bank account. So it allows the company to save its actual cash for what it needs most, investing in the newest chip technologies to beat global rivals.
Right. So it's also about aligning employee and company interests for the long term. So this latest event, it's really sparking a lot of attention across the country. Some expect this case to affect labor negotiations at other major Korean companies as well. Professor Song, what kind of impact could it have on bonus systems and labor management relations broadly?
Yeah, since the outbreak of the pandemic and following ensuing the Iran war, and then when we observe the recovery of the economy around the world, it tends to show the divergence. The top tier companies show strong recovery, whereas medium and small enterprise has been staggered a little bit and lagging behind. So that is also true to the case of inside of the Samsung, because when there is a light, there always follows a shade. So in Samsung, there is a device solution division and the so-called device experience solution division has experienced quite contrast prospect about the performance payment. Particularly the memory chip is very good, whereas the system, large-scale integration and processors and the foundry products are well lagging behind, because some memory chip, such as a supplier of the DRAM and the NAND flash memory, there are three competing big players, are Samsung and the SK Hynix and the Micron in the US, whereas the foundry products are usually almost provided by the TSMC. But right now, the foundry products are very not performing good in Samsung Electronics. Therefore, there is clearly very disparity between the labor workers who are currently in the memory chip, and on the other hand, there is foundry products and some large-scale integration. But this large-scale integration and the foundry products are quite related with the AI-related businesses and processes in the future. Therefore, clearly, this kind of this current situation cannot continue to go permanently, and there is a reversion occurs. As a result, to that regard, as I mentioned earlier, Samsung they could endure a much better position than SK Hynix. That's my point. But however, this kind of the deal, government-mediated deal, could be also occurs among the small and medium enterprise. I don't think so, because this is the performance of the small and medium enterprise, as is will be explained later, but they do not show any meaningful and significant performance at all. So to that regards, we need kind of some government support for them. So it is too early to mention that this kind of Samsung Electronics government mediated deal becomes a kind of some guideline or milestone for the other companies. I don't think so.
It's too early to say that, to generalize the current situation. Now, so this agreement right now, it still needs approval through a union vote, Professor Song, but some shareholder groups are already criticizing the size and the structure of the bonuses and even mentioning possible legal action. So could that become a meaningful variable going forward?
Currently, among the Samsung Electronics, the division, the device solution division of labor workers are very welcome the current government-mediated deal. And so, according to the reports, among the 50,000, more than 50,000, the eligible union workers, among them almost more than 30,000 people already cast a ballot. And then it will continue until the next Wednesday, May 27th. But I guess this will be approved, ratified by the union mostly, despite some kind of some grunt and complaint will come out within. Then this is currently the legal situation, legal action that is remarked by some shareholders, but that is most unlikely. The reason is because this kind of performance payment is regardless of whether it is paid before the corporate tax or after after the corporate tax, then these employees who receive the bonus and payment are subject personal income tax. Then from the companies or firms, owners and the shareholders' perspective, the net income is not affected at all because this bonus and this kind of payment of wage in the form of wage, even though this regardless of whether it is in the form of performance related, then that does not belong to shareholders' share. Shareholders are only eligible for the dividend payment, and that is absolutely determined by the executive officers in the board members of the company. And then those board members are supposedly selected by the shareholders in the annual meeting of shareholder. As a result, even though they claim that the shareholders should be allowed to cast approval of the company's policy, all they can do is exit selling shares or otherwise raise the voice to be heard in the annual meeting to change the directors in the board. So therefore, this is kind of just a threat without any meaningful significance.
So we'll have to see how it goes in the coming days. Yeah. But following this agreement, the tentative agreement, the Korean stock market has rebounded, and Samsung Electronics shares surged past the 300,000 won mark for the first time ever. Professor Kwok, do you think the agreement has eased some of the market's concerns?
Yes, I think it's clear that this agreement has significantly eased short-term anxieties in the financial markets because of the resolution of uncertainty. However, we must also consider the macroeconomic elements at play here. Even though the immediate internal crisis is resolved, but the broader macroeconomic environment remains challenging. So high interest rates, persistent inflation, and geopolitical risk continue to weigh heavily on overall demand. So therefore, the market can now refocus on Samsung's intrinsic value, such as its actual semiconductor earnings and technological competitiveness and so on. However, these underlying macroeconomic headwinds will continue to influence investor sentiment and the sustainability of this rebound.
Now, Professor Kwok, shifting gears, the National Growth Fund, one of President Lee Jae-myung's campaign pledges, has officially launched, and the goal is to channel public investment into industries like semiconductors, AI, and secondary batteries. How meaningful do you think is this policy initiative?
I'm actually quite optimistic and hopeful about the National Growth Fund's potential for success this time. First, this fund has the potential to fundamentally improve our financial market ecosystem by inducing retail investors to engage in long-term investment. Currently, a significant amount of retail liquidity in Korea is concentrated in short-term speculative trading. However, if the fund is structured transparently and offers reliable, attractive returns, I think it can successfully channel everyday investors' capital away from short-term volatility and into patient long-term wealth building. And more importantly, I think we have to look at the powerful positive externalities this fund can generate. Strategic sectors like AI, advanced semiconductors, and so on, I think they can turn a profit with this fiscal support, and private markets often fail to provide enough patient capital for this. So the government's financial backing acts as a crucial bridge, observing all the risks and allowing these companies to focus on technological innovation.
What about Professor Song? Some people, they point to past policy funds that had ambitious goals but disappointing returns. What kind of risks should investors and policymakers watch most closely this time?
Considering our South Korea's economic size, actually, it is quite difficult for consider the size of the financial market and our economy size. It is very difficult to have such a JP Morgan or Morgan Stanley or something like such a big kind of investment banking or investment private equity fund, KKR, something like that. However, because this is supported and by the government, initiated by the government, kind of there is a government sponsorship because to guarantee some transparency and to devise the optimal investment strategy, who is in charge of the management of this fund. So there is a tax benefit and there is potentially some loss buffering mechanism. So this draws a very explosive response from the investors, particularly retail investors are quite interested in. But what is a very risky portion is the lockup period is 5 years. So this means that there is for the investors to take out the money out of this fund. So this is typically the case in the such as a private equity fund who are very famous to make a long-term investment and also hedge fund. So this is a kind of adoption of the investment banking and some private equity fund investment strategy to enforce the long-term investment. So I anticipate some kind of the over-the-counter, OTC or over-the-counter market will emerge to provide the liquidity, those among the investors who participate in this fund, but they need some kind of very prompt liquidity. So that is subject to huge discount, definitely. So that is why this is kind of risk appears. And also for the managers who is in charge of this fund, also there is a clawback, which means the performance is bad. They must pay back the earnings or their bonus payment. So to that regard, this is alignment of incentive. The managers is good, but even retail investors who are in the emergency situation in need of the liquidity or cash, they must bear the burden, or they must take responsibility for that.
It definitely seems to be the case. Now, Professor Song, we are expecting the Bank of Korea's Monetary Policy Board to meet on the 28th, which is just near from now. And with slowing growth and rising household debt both becoming concerns, what do you expect from this month's rate decision?
First of all, I think the interest rate will remain what it used to be at 2.5% of basic interest rate. Then the different countries face a different economic situation. Even when we look at the foreign exchange rate change against the US dollar is, even the Israel shekel and some Nigerian, Hungarian, Eastern Europe, such as Russia, they have shown strong gain against US dollars. In the meantime, Japan, South Korea, and then in Philippines and the East Asian or Southeast Asian countries, currency has suffered from the loss against the US dollars. Why this occurs? I believe this is a very short-term kind of oscillation or some kind of temporary very response. Because the reason is basically currently, because of the Iran war, the situation for Russia and some kind of stunned countries, they are in the very advantageous position right now. Whereas Europe and East Asia countries a little bit suffered from the blockade and the supply disruption of the energy source. So that is why we have seen that change of the current exchange rate. That is caused by the outflow of the investors, primarily from the United States. They would like to find some much better place to make or to store their money for the time being. So I believe this is just a temporary, as long as our South Korean economy and Japan, because of Dakaichi, she announced that huge fiscal support for the economy. So what is now we have to consider this some opposing part is growth or the stability or just for the favorable to the financial industry. I would like to bet on the growth is necessary for the small and medium enterprise and the common people. So that's why I hopefully have some lower interest rate in the future, despite the possibility of a hike of inflation. But still, therefore, that is a kind of dilemma for the members of the open market committee in the Bank of Korea. So that's why they continue to stay where it is right now.
So we'll have to watch closely on the Bank of Korea's message in the coming days. Thank you so much for your insights, Professor Song.
Thank you, as always.
And of course, Professor Kwak as well. We appreciate it.
Yes, thank you.
And that'll be all from us on Within the Frame. Be sure to tune in again next time as we continue to explore the stories that matter. Till then, stay informed and engaged.